So, now that we have calculated all our normal balances, and now it's time for us to begin to start to work on creating those financial statements, we want to do a trial balance. A trial balance is not a financial statement because it never gets distributed to the public. It's not there for people to make decisions. It's an internal device for the accountant to make sure that his debits equals his credits. Remember, every time we journalize, our debits must always equal our credits. And so before we go on to make financial reporting, those financial statements, we need to assure that our debits are still equaling our credits and that we did not mess up. Now, that reminds me, I haven't calculated total balance for cash. So let me go ahead and do that now. And we can move on for our trial balance in just a second. So we have 30,000 plus 5,500 plus 2,000 plus 2,000 minus 20,000 minus 2,000 minus 300 minus 5,000 minus 1,200. I have $11,000 in cash, but what I would like to do, because it's such a large number, I'm going to recalculate it. Please make an attempt to recalculate and double check your work, because what seems to happen a lot of times is you can make a simple mistake by using the calculator incorrect. And I've seen so many students make that error on exams. So it's always good to double check your work. And again, I get 11,000. So now we can work on this trial balance. So trial balances are easy. All you do is you have 3 columns. So I'll give you a heading. We'll say the company name is ABC. The type of report is a trial balance. And you have to put the actual period. So let's just say December 31st. The date, right? Trial balances are very easy. All you have to do is you have to create an account column and a debit and credit column. Just that easy. An account column and a debit and credit column. Okay? And so after that, you just fill in the information that's in your ledger. Okay? Now, there's a particular order that you have to place these accounts in. The order is simply the accounting equation. What's the accounting equation? Assets, liabilities, stockholders' equity. So that's what we're going to do. Okay? Now, my accounts, cash. Always start with cash. Cash is king. Next, I will look for accounts receivable. Next, I would look for supplies. We have supplies. All of these are called short-term assets. These are assets that convert to cash less than a year. Those are assets that you don't have that long, okay? Now we're going to go to our long-term assets. These are the ones you keep for longer than a year. Most of the time they're operational assets. You need them to operate. And so an example of that would be land. Of course, we're going to keep the land longer than a year. What else assets do we have? Furniture. Of course, we're going to keep the furniture longer than a year. We also have building. And as of now, that seems to be all of our assets. So now we will go on to our liabilities. So we have 2 liabilities. We have accounts payable and notes payable. Still following the accounting equation, guys. And then we're going to go on to our stockholders' equity. Stockholders' equity is broken down into 2 parts. The first part of stockholders' equity is paid in capital. Paid in capital is what? Common stock. So we're going to go ahead and report our common stock. Then we go to the second part of stockholders' equity, which is retained earnings. Retained earnings happen to consist of what? Income. Income consists of what? Revenues and expenses. So we're going to look for our service revenue. Then we're going to go to our expenses. We have a rent expense, one expense. Next, we're going to apply the last thing that affects retained earnings, and it's what? Net income, net losses, and what's the last account that affects retained earnings? Dividends, you got it. So we're going to report our dividends. What I like to do is count my accounts to make sure they match what's in my ledger. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Make sure I didn't skip anything. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Perfect. Now all we have to do, guys, is plug the numbers in, the ending balances in. Cash, $11,000 on the debit side. Accounts receivable, $1,000 on the debit side. Supplies, $500 on the debit side. And obviously we know all our assets are going to have a balance on the what? Debit, because that's the normal balance. Land, $2,000, $20,000 on the debit side. Furniture, $18,000 on the debit side. Building, $60,000 on the debit side. Now we're moving on to our liabilities, and liabilities have a normal balance of a what? Credit. So we go to accounts payable, $200 on the credit side. We go to notes payable, $60,000 on the credit side. We go to common stock. That's a part of stockholders' equity that also has a normal balance of the credit side. It always grows on the credit side. It's a part of the all-clear system. $48,000. Service revenue, $10,500. Credit side. Rent expense, is that on the credit side? Do expenses grow on the credit side? Absolutely not. Rent expense is going to be on the debit side for $2,000. And last but not least, we have our dividends. And where are we going to apply these dividends? Dividends are going to be $5,000 on the what? On the debit side. Now, last thing for this report is that we have to calculate totals. We need some totals. And hopefully, our debits will equal our credits. If our debits equal our credits, will it essentially show that we are foolproof correct? No. We can still have made an error even if our debits equals our credits on this trial balance. All the trial balance essentially proves or validates is that our debits equals our credits. But we still could have an error. So I'm going to add up the debit side, $11,000 plus $1,000 plus $500 plus $20,000 plus $18,000 plus $60,000 plus $2,000 plus $5,000. And I have $117,500. Now, I'm going to go ahead and take a chance before I recalculate it to make sure I made a mistake or not. I'm going to just go ahead and add the credit side. Because if they balance, I know that I did it right. 200 plus 60,000 plus 48. $48,000 plus 10,500. And guess what, guys? We are not balancing. I have 118,700. We are definitely not balancing. And so that's okay. This is a perfect example of what to do next when it doesn't balance. So, if you get into a problem like this on a test and you're like, okay, it's not balancing, what do? Don't freak out. I'm glad that this happened. What I'm going to do is I'm going to subtract the two totals to see what the difference is. Okay? So let's subtract the debit total, which is 117,500, from the credit total, which is 118,700. And the difference is $1,200. $1,200. Now that's a significant number because what? Well, I'm looking at my ledger and now I'm looking for $1,200 because possibly I didn't do a posting with $1,200. And guess what? There's a cash amount here for $1,200. You guys see that? $1,200 is a cash amount and it's the very last for $1,200. So I have to look back to my journal. Let's look back to your journals and see what was that other amount for $1,200. I see a credit for $1,200, but nowhere else on here do I see a debit to balance it. So that means I forgot to post the debit for $1,200. I hope you guys are understanding what I'm saying because this is critical. This is very good that I screwed up. So looking back, we had a salaries expense. Didn't we have a situation where we had to pay salaries expense for $1,200, or did we? I wonder if we did salaries expense. Did we do salaries expense? Well, that's where that $1,200 came from. And so what we would have to do is create a salaries expense account. Because this $1,200 came from salaries expense. We paid salaries expense. And so I didn't create the salaries expense account. Suppose that we paid salaries expense, how would we journalize that transaction? We would debit salaries expense and we would credit cash, right? Keyword is paid. So obviously if I posted the $1,200 for a credit to cash, but I did not post the debit to salaries expense. And so that's what I have to do. So I'm going to debit salaries expense for $1,200. Now everything should work because now I have an extra account that needs to go to my trial balance. It's an expense, and so it needs to go right under rent expense. And so I'm going to go ahead and post the salaries expense right there under there. And obviously the ending balance for the salaries expense is $1,200. And so I'm going to post $1,200 there. I'm also not going to forget my dividends balance. So I had a dividends of $5,000. And so now my balance should be $1,700, which is exactly the same amount as I was on the credit side. So this was actually a perfect illustration of how to clean stuff up and why it's so important to do the trial balance. Okay? So hopefully you guys can watch this over and get some real value from this. Next thing we're going to do is take this information from the trial balance and create the financial statements.